Welcome back, investors, to Ticker Time News. I'm Adam, and the Gridlock Bull Trade lasted about 5 minutes today and then gave way to some combination of crypto crash fears, tax loss harvesting, which is selling your losses for a loss to help offset some of your gains for the year, but it's only up to a certain amount. So make sure to check with your tax official, your accountant, or whoever you go to for that sort of personal advice, who knows your situation, to get advice on whether tax loss harvesting is right for you. And of course, the likelihood that there was a pretty big slice of just good old generic bear market selling today. Now, the disconcerting action or price action in the cryptocurrency, that kept a lot of buyers sidelined today, along with disappointing quarterly results from Walt Disney last night, who was down 13.2% today, hitting a 52-week low, and a number of growth stocks like Affirm down 22.6% today, setting a new all-time low for that stock. I think it's down to like $7 and some change now. Market participants also digested midterm election results, or lack thereof. Some races remain too close to call, yet reports indicate the likelihood that the outcome is a split Congress remains kind of strong, at least if the margins kind of hold up. Margins might not be that great either. So at the very least, we should get a legislative gridlock environment, and that would make it near impossible to pass additional tax hikes or major spending plans, which was the expected outcome going into the election. Just the margin size is now a bit smaller. Now, the major indices had been clinging to somewhat of a narrow trading range, albeit in, all right, it wasn't negative territory, but it was a tight trading range this morning. That was until selling pressure picked up noticeably in the cryptocurrency market, and stocks took another leg down. This followed reports that Binance walked away from a plan to acquire FTX.com, or the non-US assets of FTX. Now, FTX CEO told investors a few days ago that the cryptocurrency exchange would need to file for bankruptcy unless it could garner more capital, as it faced up to $8 billion in a liquidity shortfall. This was according to a Bloomberg report. Bitcoin was down another 14% today, and Ethereum was also down another 14.2%, right around the time the stock market closed. Now it is catching a bid, and crypto is bouncing. It's up. Bitcoin is up 1.3% right now. Ethereum is up about 2.7% since the close of the cash market for equities. That's a good sign. Can it hold? I don't know. We'll see. I still think these are some pretty interesting numbers to get in at for Bitcoin and Ethereum specifically, not so much for the altcoins. Now, the possibility of margin calls as crypto prices plunged undercut the stock market, which is likely to be used as a source to fund, or at least help to fund and meet some of those margin calls. Now, the S&P 500 fell below 3,800 today during today's session and was unable to reclaim a posture above that mark as bids fell by the wayside in a risk-adverse market. Now, real quick, you see the question on the screen. It has been there since the open, and I want to address this. I have SPY on the chart here. Tomorrow, it's a big day, right? We have a big data dump tomorrow. We get our CPI report tomorrow. We get our regular CPI numbers, and we get our core CPI numbers. Will that core number finally start to slow down and come down? Because it's been going up month after month after month. Tomorrow is a binary choice, okay? The data that comes out about CPI, it is binary. It is either hot or not. It is that simple, hot or not. And it will be the single most important driver of this market going forward into the rest of this year. And this is going into your question, Market Ninja. So, looking for advice here with this question. opened a SPY call this morning at 386 strike. Expiration 11/16. Down 50%. Should I sell for a loss? Double down. Open puts to be delta neutral. Do nothing. Good question. Here's the thing. You will know exactly what to do tomorrow within the first hour of trading. Okay? The market is either going to take this data, okay, and it is going to sell off if CPI is hot, or the market's going to take this data for a not so hot CPI report and it's going to rally. RSI right now on the SPY is right around 50% or at the 50-point line, okay? That means it's not strong and it's not weak. It's kind of hanging out in neutral territory, waiting on which direction to go. And that's the thing about going into a binary event like this with CPI data. You just don't know. It could be a flip of a coin. And at this point, it kind of is a flip of a coin. Binary means a 1 or a 0, right? Hot or not on CPI data. So if CPI data comes in and it's not hot, I would probably let this thing ride and do nothing. If CPI data is hot, then I would probably do puts, okay, to combat what you already have. If within the first hour of trading, the market doesn't know where to go, that could be a worst case scenario. If this data is not clear and precise, hot or not, then it's going to be up to a whole bunch of market participants to decide where this market's going to go. Now, let me show you a few key points here on the chart, okay? Number one, I want to go into the 5-minute here, and then I'll come back to the daily view. There's an anchored VWAP, and it's a very important one, especially for the SPX and the SPY. And we'll look at this for the Qs and the IWM as well. Let me open this chart up here a bit and give me just a moment to fix this. Maybe I should have started with the daily view because the chart was already set up. All right, this anchored VWAP that I want to point out to you, it is anchored to the low. Oh, what did I just do? I just grabbed something I wasn't supposed to. Okay. Hit the back button. All right. Come on up. Here we go. All right. What we have on the screen, 5-minute view, and this is today. Only today is visible. We had the gap down this morning, and we picked up half of that in the morning trade within the first hour. It's always the first hour, isn't it? All right, but that set some confusion right there, all right? Now, let me get the highlighter out to help you see, because I have got a lot of lines on this. All right. The anchored VWAP, it's a black line. It's coming across the screen right here. It acted as support this morning. It acted as support in the sell-off after the bounce this morning. More support, and then it flipped over and it acted as resistance. And then we just went off the rest of the day, okay? This will be a key area to watch. Right now, for the SPY, it's sitting at 378. If we do not get some incredible good news for the CPI report tomorrow, or I guess let me rephrase that. If it is good news, if CPI, the core number, has cooled off, right? We're like a 5.9, 5.8 even. Then we could have a gap up. But watch that level the 378. Will that area, and there's also a trend line here that I'll show you on the daily view. There's a trend line there also. Will that act as resistance for good news? I don't think it will. I think we could potentially gap up right above it, okay? And then potentially just continue soaring into the rest of the day. If the CPI core number is better than expected. And right now, that core CPI number, the expectation is 0.5%, okay? 0.5%. Remember last month, it was at 0.6%, month over month, not the year over year number. Pay more attention to the month over month number, not necessarily the year over year number, because all the headlines will be paying attention to that year over year number. Okay, let's go back to the daily chart. Let me fix this and open this up, and you'll see that trend line that I'm talking about much clearer. I want to open this up real nice so we can see it good. Okay, give me a quick second to open it up. It always lags some whenever I'm doing a live stream. I know it's the Pixel book I'm using. I need to get a real computer, don't I? So the crypto trade today, that really messed up my thoughts on what today could be. I did not expect today to be 2% or more of a sell-off type day. I really didn't. Okay, the trend line that we're looking at right here, it's about 380. Let me get the highlighter again. And it's running right here. Resistance, resistance, and then it changed to support. It changed to resistance on the way back up. And then when we gapped down this morning, this is exactly where we gapped down to. This point right here, okay? This point right here. We gapped right down to this trend line going across, all right? So it's at 380. It's a very, very important line in the sand. Just like for the SPX, okay? Which is more in tune with the S&P 500 than the SPY. 3,800 to 3,810, it's bullish above, bearish below. So being below this 380 on the SPY or 3,800 on SPX, it's not good. It's a bearish context. Now, with this binary event happening tomorrow, some of the key indicators that I would normally call out, like for example, with today's move down, we're disconnected from the 5-day EMA. And you know how important that is. Let me drop this screen down here. The 5-day EMA is at 377. And remember, looking back at the anchored VWAP, it was at 378. That's a very key level, okay? Tomorrow, if we don't reconnect with that, I mean, we don't have to, especially going into such a binary event. So let me see here. I want to make sure I'm answering these questions so I'm not backtracking too much. I don't see major price decrease for the goods and gas for last month. We'll look at that too. You're on to something there. All right, let's go back over here to the chart. We'll go look at oil here in just a moment. Because this will help us to understand how CPI may come in tomorrow. There's a lot of debate on peak inflation. You know, the regular CPI number, us hitting 9.1, peak inflation. We haven't been back to that yet. That was a few months ago. That's been coming off. But core CPI hasn't peaked yet. Maybe last month it did peak. Maybe not. Okay, so 380 for the SPY. If we don't get back above that, we're in a bearish context. Now, we do have two other anchored VWAPs here that we would be approaching that could be support, and it's right around 371 and 372. Now, these two anchored VWAPs, they go back, number one goes back to the quarter to date anchored VWAP. So it was anchored to Monday, October 3rd. And then the other anchored VWAP is anchored to the September 21st FOMC meeting. So those two anchored VWAPs are kind of converging there for the SPY that could potentially act as a support, especially if the report is as expected and the market doesn't know what to do with this. The market has no idea how the Fed might react to inflation that is not going up or not going down. And that would be, I think, a bad choice for tomorrow. Okay, so again, if the CPI, core CPI number has come down, then watch for us to get above 380 on the SPY and then run with it, because I think there is a runway for call options above 380 on inflation coming down. I really do. If inflation is still hot, if it ticked up higher for core CPI, then we won't come near that 380, I don't suspect. And then you might want to then switch over and throw some puts at the game to offset your losses. If it comes in as expected, that probably leans a little bit towards good news than bad news for the market. And then look for it to try to find some support, because it's down right now. RSI at 50% isn't the best. And it's not the greatest. It's like neutral, okay? All right. So that's what I would do, okay? If the market gets above 380, I would add to the calls and let them run. Lower my cost basis some. If the market is going to go down and it breaks the 372, 371, offset it with the puts, that's what I would do. Because I don't know that, at least for the SPY, I don't know if we would go and try to set a new low for 2022 unless the inflation comes in hot. Then I think we could be on a path to set a new low for 22. And just to remind you, the closing low for 2022 would be August the 12th, Wednesday, August the 12th, and that closing low was 356. The intraday low for 2022 was the next day, Thursday, the 13th of October, and that intraday low was 348. Okay. Now, that intraday low is the anchor VWAP that is right here at the 371, 372. And then the quarter to date. Wait, am I getting my lines mixed up? Hold on. Let me double check just to make sure I got this right. Let me double check. The anchored VWAP here. Okay. All right. And this anchored VWAP. Okay. So my apologies. Let me rephrase that. The anchored VWAP for the 372, 371, that is the quarter to date from October the 3rd and the September 21st FOMC meeting. Those are the two anchored VWAPs that meet up at the 372 to 371. Okay, good. Oops. I can't believe I just did that. I took my anchored VWAP off. All right, there we go. All right, get rid of that highlighter. All right, let's go look at US oil real quick as the ticker there. That's going to help us look at this and see how has the price of oil fluctuated over the past month. And is that creeping in to potential CPI numbers tomorrow? So if we look here over October, it really doesn't look all that great, quite frankly. All right. The past 3 months, right here, going back to August 1st, this yellow box, all right, the yellow highlighted box, that's where oil has basically been trading in, the chop box for oil. Now, if we try to find, what's the median here, right? We're probably looking not too far. We closed today at 85.74. And what would median be? Somewhere around 86 over the past 3 months. And if we're just looking at the month of October, let me put a vertical line here to show you October 3rd. And let's go to November 1st and put another vertical line. Now, if you go and look at where October began and where October ended, October opened down here and then it ended up here. So that means over that month, the price of oil went up. Now, core CPI does not include energy and it doesn't include food. But in your headline CPI print that consumers will be looking at, that the average retail investor will be looking at, oil is increased. So that normal CPI number may go up from last month. That would be bad. All right. So you do have a point there because price for oil has not dropped. And everything revolves around the price of oil. Everything. Plastics are made from it. What's everything shipped in? Plastics. Our transportation sector. How do all of our goods get shipped all over the country, all over the planet? Oil, fossil fuels. So this price creeps into everything. Even if the actual price of energy is taken out of core CPI, it still works its way in there. All right, let's clear that and let's go back. Since we're looking at these numbers, let me go to the S&P 500 and let's look at what happened here. All right, let me open this up a little bit and then I'll just go straight to the Qs and then we'll talk about some of the other stuff that happened today. All right, let me pull this up. Now, earlier today, the 20-day moving average, it was acting as support a little bit for the SPX, the S&P 500, and that 20-day moving average is sitting at about 37.66 right now. So it was holding up for a little bit, but it ultimately didn't. As crypto worsened, so did stocks. All right. So we have that same trend line going across the top of today's candle where we opened up at. That's going to be a resistance area, and it's sitting right about 3810. So 3800 to 3810 for SPX. That's going to be a resistance zone, okay? If inflation numbers come down, then we have to make up from where we closed at today to that 3800 area. I mean, we were down 2%. So it may be a challenge to get there, but if CPI numbers come down, then yeah, we'll get there and we'll surpass it. Maybe not in a single day, but maybe by the close of Friday. And all of this falls within the weekly expected move. We're basically going back to where we started at the beginning of this week. On Friday, we closed at, what was that? 37.70. So we're about 20 or so points below where we closed at on last Friday. So we've basically gone nowhere so far this week. That means we're sitting right in the middle of the weekly expected move. So the upper end is at 38.87. The lower end is 36.53. So again, we're sitting right there comfortably. Now for the two anchored VWAPs right here, they're right about, let's see, what would this be? 37.34, 37.32. Interesting. All right. Now, the indice that I'm worried about is not so much the SPY and the SPX, but it's the Qs. The Qs are knocking on the door of a new 2022 low. The Qs are not in good shape. Not in good shape. Facebook or Meta Platforms announcing the biggest layoff, 11,000 employee layoff, biggest in its history, isn't a good thing. And that didn't help the Qs out today. And we kind of expected that. Now for the Qs, they have their own line. They didn't quite open up underneath this trend line and gap down to it, but came close. And it's this blue trend line right there at that dot, or right about here. Now, closing down here, we're not far off from last Thursday's closing low down here. Now, that closing low was 260. That is the closing low for the year. We do have an intraday low, right? CPI day. This was right here. This was the October CPI day, where this great big candle is right here. And we had a huge gap down because we closed here and then gap down big time off of that hot CPI print. But then the market said, heck with it, let's rally. So it can be very confusing for new investors that say, okay, inflation was hot. Typically the market has gone down in those scenarios, but why did the market flip and start rallying after that monster low? And it's because it was a new low for the year, even though it was intraday. Could something like that happen tomorrow? Could we gap down big time? If we gap down the same amount, it still wouldn't be as low as that one, because we were lower than we are. Well, actually, we're pretty darn close. We're pretty darn close. We're about, let's see. Yeah, we're pretty darn close. Oh my gosh, I didn't realize how close it was. Our closing low today, 263, and this closing low was a 262. So we're like 50 cents off of that low. So yeah, we could actually Oh my gosh, I didn't even realize that. We could gap down and hit a new intraday low and then rally from that. It is possible. I mean, it is so difficult going into, these big data dump days with the CPI print because nobody knows what to do now. We can, use history to try to guide us, but still, looking at last CPI day, it wasn't logical. It was emotional, right? And then the very next day, we almost gave it all back. So, who knows how the market is really going to react. And that's why it's a good thing whenever we go into, when we're in a bear market, right? And we go into these binary event days, it's a good thing to go in with a clean slate. It really is. Don't get stuck on these big type of days like tomorrow's going to be. Just want to put that out there. It's always best to go in on these type of days with a clean slate. Okay. Let's go to the IWM. But yeah, the Qs, they are just knocking on the doorstep of setting a new 2022 low. Now, the Qs are in worse shape than the SPY and the SPX are at this moment in time. Look at this. Since we've been live, Ethereum is now up 4.6% and Bitcoin is up 2.5%. So it is moving pretty quickly right now. It's doubled since we've been live. So in 30 minutes or so, Ethereum and Bitcoin, Ethereum was at about 25 bucks. Now it's at about 52. Being up, that is. Okay. I just saw that out of the corner of my eye, and I just want to mention that. Okay. For the IWM, it's hanging out here. It found support at a anchored VWAP. These always act as supports at some point. Just like earlier in the day, the 50-day moving average and a couple other anchored VWAPs acted as support, but then they turned into resistance for the rest of the day. So that wasn't all that exciting. So these aren't strong support areas, but they can be technical levels. So that one that found support today was at 174, just about where it closed at. And that anchored VWAP. Let's see, where is it anchored to? Which day? It's anchored to quarter to date. So that quarter to date anchor there acted as support. Now, the lower end of the weekly expected move is $2 down from where we are at 172. There's another anchored VWAP on the way down. It's still at the 172 range, 172.8 versus weekly expected move, 172.1. And it's not near. It's 164 would be its 2022 low. It's not near it. It could finish the week within its weekly expected move, although it's not looking likely. It just all depends on what that data says tomorrow. It is really such a big thing. All right, so that's the IWM. Okay, so let's talk about a couple of things about today. And if you have other questions, please feel free to ask them at any point during this live stream as we march along and talk about this. So other things that market participants had to deal with today. Well, they digest what midterm elections results we have had, right? We talked about some races are still too close to call. It looks like the government's going to be in a gridlock situation, which is a good thing for the markets because that provides some security, right? Some security. And the markets love security wasn't the right word, certainty, because the market loves certainty, and having Washington gridlock so they can't pass major bills, that provides certainty for the market, and the market absolutely loves it. Absolutely loves it. Let's see what else do we have to talk about here. We talked about CPI. That's a big thing. What else do we have? Oh yeah, the 10-year and the dollar. We have to talk about that because the dollar, it did something interesting today. But first, the 10-year note, there was an auction for that today, and it was dismal. It did not go well at all. And of course, that then in turn hurt the 10-year. But the dollar, let me put the dollar up on the screen here because the dollar rose today 0.8% to 110.47. And remember yesterday, we called out 109.35 as a key level for the dollar. And you'll see it show up here on the chart, left the circle. That was a very important place for the dollar. Now, the dollar opened today at 110.6. So it marched even higher from that point. But the dollar did get down to 109.45. So nearly to the T, calling that very specific low there for the dollar to bounce from. Almost came down to it, and it did. So that was another reason that equities had selling pressure because of the move higher in the dollar. There is an inverse correlation with the dollar and equities. When the dollar is rising, equities are falling. When the dollar is falling, equities are rising. And right now, the dollar is kind of set up to make a significant move higher, which would then put a significant pressure on equities to go down. So be careful with that. With the uncertainty in the crypto market, that could also play a role in the dollar gaining strength, right? Because some in the crypto market may want to go and trade for that greenback that's been bullish for 2022. I think that's an odd trade to make. Someone who is in the crypto space then going to the dollar, that's kind of weird. Going from decentralized to centralized, it doesn't make sense. But it's always a possibility in this weird phase of the market that we're in, where nothing is logical. But yeah, watch that dollar. It's getting right back to this trend line here, and the dollar is either going to get rejected off of this, because what we could be seeing is we broke down below it, right? And then we found this support. Now we're back testing, and we could get rejected off of that line. That's always a possibility or a probability for the dollar. Or the dollar is going to make its way through, then back test that, and then take off. So we're at really another inflection point for the dollar. I know I've used that word inflection, or two words, inflection point, that phrase, multiple times this week, because the dollar and equities have been at them. And it's just so strange to see how things are playing out here. Now, let me go back here just a little bit further on the dollar, and let me adjust this chart here real quick. Okay, So if we look back here on the dollar, we need to go back here, about middle of the screen. This is August, all right? This was the last time that the dollar broke down below that trend line, and it broke below that trend line for one day. Broke down that trend line one day, found support, and then it got back above the trend line and then back tested the next day before taking off. Is that what we're going to see here? Is that what we're looking at right now? Another August type move where it breaks below it just for a day and then it climbs back above, and then tomorrow, is it going to pull above, back test, and take off? Meaning equities are going to have to take the back seat? That's a probability. And since we saw that one time before here in August, it's a good probability that that could be what we're looking at here. But it's not a guarantee. Make sure you understand the difference between the probability in the markets, because that's all we're doing here. We're trying to figure out what the probabilities are of something occurring, because there's no guarantees in the market. Okay, so we've got that. And of course, there is pretty big support for the dollar. Again, that 109.35, that's the biggest support that the dollar has right now at this particular moment. If it breaks down from that, then there is another spot for resistance, but that's the big one, 109.35. That's very precise, I know. But the same thing occurred in August, so just be on the lookout for that. And of course, the dollar has fallen a lot harder now in a short period of time compared to how the dollar fell in August, because it started mid-July with the dollar falling, and it was almost kind of like moving sideways for a little while. The dollar hasn't been doing that. It's just been expansion, expansion, expansion. Where's the contraction? Maybe that's what we're starting to get. Okay. All right, moving off the dollar. The sectors today. Let's open those up. All 11 S&P 500 sectors closed in the red. Utilities XLU had the slimmest loss, and that loss was 0.8%. Consumer discretionary, man, XLY, it lost 3% today. There were new 52-week lows with a lot of the components of consumer discretionary. Consumer discretionary even set a new low for 2022 today with that 3% loss. Along with a lot of ARC products. ARC stocks, a lot hit 52-week lows today. Kind of interesting. Energy, it was the biggest loser, down 4.9%. And it brought up the rear as oil prices pulled back. Now, we looked at oil. It was down 3.9% today. We got it. It closed at 85.67 a barrel. Natural gas also fell 5.8%. Why do you think oil fell so hard today? Because it looks like Republicans are going to take control of the House, meaning a gridlock Congress, meaning maybe there will be some legislation about energy that helps to produce some energy. Maybe, I don't know. But there definitely won't be any major legislation that stops energy. And I think that's why energy, there was a big sell-off today because of that fact. Now, looking ahead to tomorrow, you are definitely looking for that CPI print. 8:30 a.m. Eastern, the November CPI Consumer Price Index comes out. The month-over-month expectation is 0.7%. Prior month-over-month was 0.4%. Then core CPI. The expectation is 0.5%. The prior reading was 0.6%. So, in the normal CPI number, you may see a tiny tick up. That's what the expectation is. But the core CPI number, which whether you understand or not how these numbers work, the core CPI number is the more important number. The month-over-month number is the more important number of core CPI. And that expectation is 0.5%, a 0.5%. Okay. Then on top of that, also at 8:30 a.m. tomorrow, we get our weekly initial claims. If inflation comes in hot and the job market is still holding on to jobs, equities have nowhere to go but down, in my view. Now, the expectation for weekly claims is 220,000. That's what the expectation was last week, but we got 217,000. So the job market was holding up pretty darn well. Now, continuing claims, last week, the reading was 1.485 million. So to recap the past 45 minutes, tomorrow is a big day with a big data drop. It will be a binary event with lots of volatility. And as we have seen from other big days like this, the market can move in dramatic fashion one way or another, and an hour later, swiftly move back in the opposite direction. That's how it was last month, last month's CPI day. We got our intraday low for 2022 and then bounced big time on bad numbers. So the market will not be logical tomorrow, okay? It is best to be patient. Do not force a trade. Do not try to jump ahead because it could wipe you out. Wait for the setup and wait and see how the market digests the news. Plus, we've got the wild card of not knowing how bad this crypto market crash will end up being. There is no Federal Reserve or central bank to step in and come to crypto's rescue. Remember that point right there. There is no hero stepping up to the plate to save crypto. Okay? Unlike the equity market, where the central bank, the Federal Reserve, can step in to help if the market is crashing in dramatic fashion, like crypto did. Now, remember, just 10 minutes ago, we talked about how crypto had been up since we started the live stream. Well, now it's taken a turn. So some of those gains are now being taken. This is just wild. Let's click over here to Bitcoin. And remember, if you have a question, plug it in. Happy to take them. And just do me a quick favor when you have a moment and click the like button. I know it's, I don't know why. I don't know. The YouTube algorithm is going to do what it does. You know, it helps to click that like button. Here's one thing I wanted to point out. This is interesting to Bitcoin, and we'll talk about this too. Thank you again. Oh, you are welcome. Absolutely welcome. Thank you again for Daily Bread Insights. Greatly appreciated. Absolutely. Absolutely. Oil inventories increasing due to potential of China lockdowns could help oil prices decline. Yes. If China doesn't ultimately open back up, that's going to... Let me fix this chart real quick. If China does not open back up, that is going to ultimately help oil prices stay down. If China does open back up and moves away from its zero COVID policy, that could cause oil prices to go up. Something else, remember, OPEC Plus in November is going to cut production by 2 million barrels. Where is that 2 million barrels going to come from that we need to sustain prices, right? Remember Joe Biden, before the election, he was releasing 1 million barrels a day from the strategic reserve. That's going to stop soon. It'll probably stop in December, if it's not on its way to being stopped right now. That's going to stop. That stops, and that also causes oil prices to go up, because that means we're buying more oil on the open market, right? Right now, the U.S., I believe, is in a deficit for the amount of oil it uses per day versus how much it produces on its own. That deficit is bought on the open market. When OPEC Plus cuts its production by 2 million barrels, that's going to cause the price of oil to increase on the open market. Now, we saw a lot of that with the rise in oil prices during the month of October. Because remember, this news was pre-announced, both about the strategic reserves and about OPEC Plus. So that's going to play into the price of oil. Another thing that I mentioned earlier that's going to play into the price of oil is, of course, if Republicans do end up taking control of the House, that should slow down or stop anything that the Democrats may do for climate change or for the oil industry here in the U.S. So that itself can have an effect to bring oil prices down. So we've got a couple forces here at work that are opposites of each other that may just keep oil prices right where they're at, $85 a barrel or so. That seems to be the median over the past 3 months. All right. Okay, so there's a purple trend line here on the chart. And this trend line, I just want to show you real quick. It starts, where this trend line starts is right here. Okay. Hold on one quick second. Let me get this stuff out of the way. Okay, and then get the highlighter back out. Now the trend line starts at the November 2021 high, which was the high for crypto. All right, enough with the delays. Come on, you can do it. I know you can. Okay. Well, now my highlighter doesn't want to work. Anyways, okay, so there's this purple trend line. What in the world? Okay. Now the chart's just moving on its own. It's like all the moves that I've been making, it's finally... Okay. Maybe it'll start working now. Or not. Okay. So my highlighter is not working here. So on the screen, we've got the $69,000 high back on November the 9th, right? That's where the trend line starts. And then it starts to slope down. And then we get to the next time we get contact on this would be March the 29th, 2022. And then we get another tap on that trend line April 5th, 2022, and rejected both times. We continue to fall. We take a harder slope, and then there's this other purple trend line that breaks off and it takes a harder slope down. Don't look at that one, okay? Look at the longer purple trend line. So after the April 5th contact, then we run all the way down to the FOMC in September of 2020. And then we get to October 7th of 2022. Sorry, I said 2020, 2022. And we find resistance, but we eventually break through just by moving sideways. There was no big burst above it. But the interesting thing here on this trend line, as I open this up, where Bitcoin ultimately fell to, all right, let me pull the chart up. This is just an interesting fact here. That trend line, all right, come on, chart, work with me here. Well, while I try to get the chart up, that trend line is acting as support for Bitcoin right now. I just find that so fascinating. This trend line was resistance, resistance, resistance. And now it's turned into support for Bitcoin. Now, that doesn't mean Bitcoin cannot keep falling, right? Because it could. It could just continue right down this purple trend line here. But it did hook up perfectly today as a support area. So watch that trend line, okay? Today's low, 15,512, is exactly where it tapped that trend line. So for today and over the next, 24, 22 hours, that support, if it's going to continue to hold, is probably going to end up being 15,461. 15,461. See if that holds as support. Because so far, since the close of the stock market, Bitcoin's low has been 15,720. So not quite to that trend line support. I just find it fascinating that this old resistance for Bitcoin going all the way back to November, a year, is now acting as support. So again, 15,461. See if that holds. If it does, maybe we've got some stability, or at least something that we can use here as an idea of maybe where support for Bitcoin lies. And I know I'm not the only one that has this trend line. Anyone who's using technical analysis will probably have this trend line almost perfectly to where I have mine. And yeah, that will be interesting. 15,461. Will that hold as support over the next 22, 24 hours? Okay. Well, I will go ahead and wrap it up. That's everything that I wanted to cover tonight. I appreciate your questions. If you do have any other questions, feel free, plug them in. We can talk about them. Otherwise, we'll wrap it up. Big data dump day tomorrow. Don't force or rush. Be patient. Let the trade come to you. See how the market is reacting pre-market. See how the market reacts as soon as the market opens, right? Watch out for those whipsaw moves back and forth tomorrow. So please be careful. I think I've covered every aspect of what CPI could do tomorrow. So do be careful. Okay, well, we'll wrap it up here. Thank you, ladies and gentlemen, for joining me. If you could please do me a favor and click that like button, share this video with a friend. Those two things help out tremendously. And if you like the perspective and you want more of it, click the first link in the description. Something for you. Okay, have a wonderful evening. I'll be back tomorrow after the market has closed to talk about what happened, why it happened, and what to expect going forward. And with that said, have a wonderful night, and I'll see you in the next video. Take care.